everyone is doing well. So first and foremost, I'm going to start making more videos. Took a little bit of break for some time. One thing you're going to see me start incorporating more is inverse of charts. And the way I would do that is, as you know, I like white backgrounds and just white bars and black bars for the down bars instead of your traditional green and red candle bars. And the reason, I guess I kind of got the idea from Al, got used to it, started to like it. It's a little cleaner on the eyes, and it's kind of just preference now. But anyways, what I often do is, and you're going to see me show this a lot more, and I'm working on trying to build an inverse chart in TradeStation. However, I don't know a lot about easy language, and that I suspect will take some time. So just to give you an example, a lot of times, maybe we're channeling up, we get a bull breakout, and I want to see what's the opposite of this chart. So sometimes it's helpful to make sure I'm not just having upward bias in general. I'll create an inverse. So what I did is I created a tab down here, and what you'll see is these bars are bear bars. They're black bars as it's going up, and they're bull bars as the market's going down. So really, this was an up move followed by a down move. And if I take a picture, like so, and then I go to Microsoft Word, and flip the chart upside down, and then so now the chart's technically right to left, but really what I want to make it as is it's flipped. It needs to go, so I'm going to drag it. I need this part to be on the left and this part to be on the right, so I'm going to just flip the chart around. And now you will see an inverse of crude oil. So I'll drag in a second. We had a bull trend, bull breakout, and a test. Let me do it like this. We had a bull trend, bull breakout, and a test up. And here we had a bear channel, bear breakout, and a test back to the low close. And that's really helpful just to kind of help, give you the bear case. It's easy, for me, sometimes it's easy to look at a bear move and say, it's on discount. And we're taught to, everything that pulls back, so it's valuable. And, sometimes it's a good reminder. If you're looking at this saying, is this a strong breakout? Flip the chart around. And in this case, it was an up move, but, I'll give you an example in a minute on, let's just do this. Let's go to the Emini real quick. We had a day, a couple days back, where, here we go. So we had a parabolic wedge, 1, 2, 3, strong sell-off. And sometimes it's really hard. We could see this off and say, oh my gosh, the market's got to reverse. Well, let's see what the opposite part of the chart looks like. So if we took this chart and we're going to do the same thing. I'm going to go to my inverse chart, and this is the Emini. I'm going to go back to where that day was. It was over here, and again, the bars are opposite. So bull bars are down bars, bear bars are black bars, or bull bars going up are black bars, bear bars going down are white bars. And we'll just do like this. So then I go to Word, paste it, flip it upside down, drag it to here. Now I have an inverse of today's price action. So here, am I thinking, is this a reversal? So this bear bar would be this bull black bar here. Well, excuse me. It would be this white bar here. Is this reversal up? Sure, but is it a strong reversal? No. And if I compare side by side, here's this bear reversal. It's probably going higher. So here, same thing, probably going lower. Is this going to reverse the market right here? No, it's probably going to lead to a minor reversal, maybe a test down here and sideways. Well, is this going to lead to a reversal? No, it's probably going to go sideways. Is this going to lead to reversal? Wedge top, 1, 2, 3? No, it's probably going to lead to 2 legs, sideways to down. 1, pull back, maybe 2. Just like here, is this going to lead to a reversal? It might, but it's probably not. 1, 2, 3, 2 legs up. Yeah, and it can make it a little easier to kind of check and make sure you're not being a little biased towards one side. So anyways, let's look at this price action today. Coming into the day, yesterday we were rallying into the close on a 60-minute chart. We had this, so we had a bear channel, and you know you're eventually going to go above one of these lower highs here, 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 and you have to be open to that. So even though on the open, we gapped up here, you've got to be thinking that we may try and get to this lower high. So 5-minute chart, I'll do it like this. First bar of the day, big bear bar. It's okay to sell, but it's really big risk, and most days don't go straight down. So most days you get a big bar and it reverses. So we had an example here. Big bar, reversed up. Bull bar, reversed down. Second entry buy, it's really a third, so it's a wedge. 1, 2, 3. Bear bar, sold off, but then went sideways into some sort of final flag, and we got an opening reversal up. Bull bar, huge gap down, probably going to be minor, immediately reversed. Oops. Let's do it like this. So, consecutive bear bars, always in short? Probably not. It's a gap up, and it's a weak close. You have to wonder, this tail might be a sign that we're going to get an opening reversal. I thought on the open we would get at least a second leg down. But sometimes you just get this, and if you are short, you've really got to, this is a lot of risk on the open. So on the open, 43 to 76, you're risking about 33 points just to get to the high up here. So when you see this, and I'll show you on a 1-minute chart. So this is the close is 8:40. Well, technically it's 8:45 is that close. If you go to a 1-minute chart, and this gets a little, when you start to see all these bull bars, 1, 2, 3, 4, 5, 6, and this is 8:44, basically 1 minute left in the close, it's better just to get out of the trade. So at this point here, at 8:44, I would just get out to close this bar if I was short. It's best just to get out. And it is possible that this could be a lower high and we could test down. I think it's strong enough that you'll get a second leg up. And like I said, I'm going to go ahead and just quickly do an inverse of today's price action, because there's a few things I want to show from the opposite case. Let me do this. Give me 1 second here. I think it's natural for us to always think the market's bullish, and that can kind of mess with our viewing of what's going on at times. So let's look here. So at this point, I'm not going to drag this because it's just too difficult to do, to hide these bars over here, but let's just kind of pretend like we're right here. So consecutive bear bars, consecutive bull bars, tight channel. We know the channel up was tight, therefore the channel down is tight in this situation. Big bear bar. Well, it's possible that we get a bull bar closing on its high and reversal up, test of this close. That's certainly possible. Now, this is probably strong enough you'll get a second leg down, just like strong enough we're going to get a second leg up. So, I think it's easy naturally to, and I struggle with the same thing, is to think this bar is stronger, this third bar is stronger than this bear bar would be in this situation. And that's just not true. So if you have trouble selling in a bear trend, or you have trouble buying in a bull trend, in other words, if it's easier to buy in a bull trend, but it's harder to sell in a bear trend, or it's easier to sell in a bear trend than it is to buy in a bull trend, I would really consider using a lot of inverse charts and really kind of seeing both sides. It's definitely helpful. Just like if it's difficult to sell during this, make an inverse chart and ask yourself, would you buy this breakout? Because an inverse chart, this would be 4 consecutive bull bars going up. So anyways, doji, weak bar, strong enough. It's probably strong enough for a little bit more up, but it's disappointment. You have bears who sold, they're going to use any pullback they can to get out break even. Bears that sold this high, they're trapped. Bulls disappointed here, getting out break even here. This is not closing on its low. I still think we have to go higher, and we got an outside up bar. So here, outside down. Forcing you to buy at the high of the range though. Just like this is forcing you to sell at the low of the range. So again, you could easily find sellers below this low and test down to this close, just as you could easily find buyers. I mean, look at this. I have to go to the next bar, but look right here, this doji bar right here. What if this bar was closing on its high about maybe smaller than this doji bar? So in other words, if we had a bear body right here, what if we had, and we went outside up, or what if we had an inside bar closing maybe right here? Would that be a credible short? It very well could be. And this bar got too big to sell below, just as this bar right here got too big to buy above. Therefore, it triggered like so and reversed up. So now we have, you can call it a second entry buy. You can call it a low one, pull back, we went above it, and then we triggered below here. So it's technically a second entry short. It's 2 legs against this breakout, and this is a pullback. So it's basically a second entry buy, and then we get a big bull bar. So is it buy the close? It probably is. Better to wait for follow through, but probably strong enough bull bar that we're probably going at least a little bit higher. One of my concerns is with this sell-off we had on the open, you've got to be questioning if we're going to go a lot higher. Plus, we're really extended from the moving average. So if you're buying, stop down here. Maybe you can put a stop down here. Follow through. It is follow through, just like down here. It's follow through, but it's not that great. And again, just like on this chart, well, heck, y'all can't even, I apologize, y'all can't even see this document I was talking about. But when I was talking about doji bars not pointing at the screen, I'm talking about the opposite case. So I'm talking about this area right here during this area. So in other words, outside down bar here, low in the range, just like this outside up bar is high in the range. And if we would have gotten a small bull inside bar, which would have been the same as today, if we would have gotten a small bear inside bar, it would have helped going lower. What I was saying just now is this is bad follow through. 3 consecutive bull bars, so probably more sideways than anything. But look down here. Are you saying big bear bar and doji? Are you saying, wow, I've got to get short? Or are you saying, that's really below average price action and we're far below the moving average? Is this, do I really want to sell so far below the moving average? Probably not. So just like up here, do I really want to buy this high above the moving average? Probably not. So I'd be out of shorts. I would rather look to buy, I think we're going to test this high. I'd rather look to buy somewhere closer to the breakout point because I think we're just going to go sideways. And if we go up, I'd have to miss it. And there's pullback, second entry buy, but doji's high one buy. Again, I think we're going closer to the moving average. And this is probably, again, it's scalpers. Bulls buying, scalping out. So bulls buy this low, buy more lower, scalp out. Outside down bar, really close to this breakout point, and then we get a bull bar. So I'm going to have a second entry buy. So bulls, what would they do here? Well, it's an outside down bar. Just like this over here is an outside up bar. And again, if it, what I would tell you is if you have trouble in bear trends with bull reversals and wanting price to reverse up and saying, this price action has to reverse, study bull trends and look at inverses because it's the exact opposite. So I mean, you cannot, really, you have to look at it like this. You can't say that this bar right here is any stronger than this bull bar here, because it's the exact same bar, just upside down. So it's the same scenario, just with the inverse. So anyways, it's an outside bar, probably going, may go a little bit lower, but probably not much lower. Probably going to find buyers soon. You could buy the close, buy the low, wait, buy a stop entry above for a second entry buy, and we got it. So new high of the day. Again, I think we need to touch the moving average, so I'd be looking to take profits. Second entry short. Is it a strong sell? Well, you know what I'm going to say. Is this a strong buy? No. Therefore, this is probably not a strong sell. And, again, 2 legs down, testing this gap, probably going to have to go below it. We did. Big outside up bar. Oh, not almost out. Not really outside up, but big up bar. Second entry buy. Forcing you to buy at the middle of this trading range. Probably going sideways. And you can see when we got up there, big bear bar. So forming a tight trading range. Do you get out down here? You can, but if you do, you got to look to buy again, because you could get trapped out. Bears who sold the close, disappointed, got out break even over here, and we're starting to rally. So maybe if you got out of short, you got to look to get long again. So maybe you buy above this bar. Strong micro channel. First versatile down is probably going to fail. Possible final flag, but too tight of a channel. It's probably not a trend line break, and then a high major trend reversal. We probably need a trend line break of this for either probably some sort of some sort of higher high major trend reversal. Too tight, probably minor reversal at best. 3 consecutive bull bars at 4,600. There's a couple targets. There's measure move based on the opening range, which is here. There's the 60-minute moving average lower high from Friday that I talked about. We're really close to it. Probably at this point have to get to it. Is it buy the close? You can, but I don't really want to buy the close. I'd rather buy the moving average, but you definitely can. And big bull bar. So probably going lower sideways, probably not going much higher for the rest of the day. And there you go. We went sideways for about 10, 12 bars, sold off, and rallied into the close. So, hope this video helps.